Welcome to Things Invest. We're talking about investing, finance, and professional. As a recording time of 1:44 p.m. on Eastern Time, Ethereum contract $3,040, down about 3.54% so far. As you can see clearly on the over crypto market and the equity market, we are in a deep red situation right now, with the altcoin a little bit more severe than the key coin. Bitcoin just hovering away above the $40,000 mark. At the real level, right, the 41,500 mark, just laying there comfortably. And on the equity side, with Dow Jones, Nasdaq, and S&P 500 all in bright red territory, all down close to about 1 to 1.5% respectively. And on the 10-year yields, it spiked into a relatively severe level earlier today to 1.81%, which is also the same time when you saw the entire market crashing down, right? And at that level, as the interest rate hiked to the highest level at 1.81, Ethereum specifically has gone down to the 2,950, or specifically more 2,930, right? Which is technically the next flat number level, just a hair away from the 2,853, which is the actual next level resistance, right? And something that's interesting is that despite the rate has been surging quite dramatically, something that we are seeing collectively is that it seems like that the effect it has on market and with respect to how investors are reacting is a little bit less how would you say polarized than in the past, right? And I think we are slowly building the scar tissues, right, with getting the getting more toughened up, right? Historically, whenever we hear like interest rate spikes, or when you hear news around the Omicron, or when you hear news around CPI report, obviously today we also have to calculate the anticipated pressure from the three specific factors coming out. Well, I would say four specific factors that's coming out for tomorrow with the Jerome Powell testimony, and then subsequently the CPI report coming out on Wednesday, and then the PPI report coming out on Thursday, right? So it's going to be a volatile couple of days coming up. This is something that's expected. But the volatility, based on what we've seen so far, again, we have been extremely volatile already. That it seems like the magnitude of the polarization is not going to be as severe based on the scar tissues that we have collectively cultivated. So hopefully that makes sense what I'm saying. So let's go straight into the technicals, and I look into some news already. I would say the news are not really that worthy of our time to read into. It's just mostly just historical recap of what's going on recently. So right now, with respect to Ethereum at the $3,034, down about 3.272%, we are at the comfortable level again above 3,000, which is the comfort level, but it's a flat number, right? It's not a real level. The real level is at 3,150 or the 2,853. So we got to there approximately just like $100 away earlier. But obviously we could not get there because when we got there, ideally we were about 25 out of 70s. That's extreme oversold. And that was like the worst on the RSI's perspective historically ever, right? So right now we're rebounding back to a comfortable level, pending on what's going to be happening tomorrow. I do foresee some more volatility coming tomorrow ahead of the speech that we'll be hearing from Jerome on obviously how he's going to be depicting the economic outlook going forward. So that's something that we have to think about. But ultimately, we are extremely oversold across the board right now, and the market has been irrational. So we can only be irrational so much, right? We can never be too polarized on one side of the spectrum. So the market is slowly normalizing despite the volatility. So it's seeing a lot more just of a percolation ahead of the rebound that will get confirmatory signal on. So overall, we're trending away, and let's stay logical and do not use emotions to sell because it looks red on paper. But ultimately, as we hold this long term, and like you said, right, that diamond hand, if you may, we'll be just fine, right? So with respect to Bitcoin, we are down about 0.63%, hovering away. It's less, I would say, polarized in comparisons to Ethereum because of the price level is a little bit higher and also less prone to volatility. And with respect to the current level, the 29.84 out of 70. And with respect to the current level on the MACD, we're slowly curving up right now. So quite interesting to see that we are, just, 40 seems like the bottom, and I think it is pretty much the bottom. I don't really foresee like 37,500 because that will require us to drill really, really deep oil, unless you try to find new oil. But, and what I mean by that is that corporate investors will have to sell on a loss for us to get to that new ground. So I don't think it's logical unless we all collectively just, give it up, wave the white flag and just say, you know what, I'm just gonna take a loss for the year and that's it. But how likely is that gonna be? Like, just think about yourself. Are you gonna be writing just a loss because you're down? You have to think about it that way. Unless you have to be paying for something else, right? So the big question mark is really with respect to the real estate portfolio that a lot of the funds would have, right? So Dogecoin is down about 5% right now. At the moment, it's 14.27. The bottom is technically, something we have created. We're basically rock bottom at the moment right now. We're at the 28 out of 70. So yeah, incurring the logical risk right now is not terrible. And I think we got to earlier today at the 1370, which was just completely oversold at all level. We were at the 26.33 earlier today. So, right now would be the buying opportunity, if you may. And respect to Cardano, is that down about 4.11%. We tested somewhere close to about 107 earlier this morning as the interest rate hiked to 1.81%, 34 out of 70, so still at the relatively, very oversold. So, we've been talking about this already. I think the time is the more, I would say, tolerable in comparisons to when we were, in between bouncing off the 134 to 119 before. Solana is at the resistance level right now at 134. Exactly 133 is the resistance level. Right now, the 30 out of 70. So it's not terrible, not the best, down about 6%. So it's tolerable level into incur risk, but real level is basically 133, 113 from here. Basically, we try to get back up to the 155, which is the next level of consolidation. XRP is down about 3.6%. Right now, 72. Again, right, we broke the 75, which is a flat number. We got to 69, we bounced back up immediately with the 33 out of 70. So XRP is still a logical dip right now, not terrible. Polkadot is down about 5.44% right now. At the moment, it's at the 23.46. The bottom is technically somewhere around like the 22.24. So right now, we're relatively oversold already at 37 out of 70. So not terrible, but not the best, because like if you want to, relatively speaking, you might want to buy when it's like at the 27, but polkadots have been relatively oversold already, so not a terrible level if you believe in this long term. Algorand is now about 4.18%. Anywhere from current level to all the way to 25, right? That's the level. I said 136 to 125, and we're at the upper echelon of the level right now. Shiba Inu is still selling off, down about 5.33%. This is exactly what's supposed to be happening. We have to be going down to the next level of comfortability at the low 2000, and then the low 114.56, and then to the 900 from here. MacTech is seems like Weibo is showing me something again. Let me just close that and then go to MacTech. MacTech is trying to get back up to $2, but that's not sustainable right now with the 41 out of 70. So much more logical level would be 175 to 143 from here. AVAX is now about 6.43%. Anywhere from the current level at the 80 to 60 would still be a better level. Luna is down about 6.55%. At the moment, 69. So 62, 52 to 45 from here. And then with respect to elrond, we are at the 189, so we're like completely rock bottom. We're doing this like ping pong ball affectation again. Let's see how oversold we are. We're at the 31, with the 29.50 at the moment right now. So this is very oversold. It is what it is, right? And on the overall price level, these are the identified resistance levels. As you can see, we are in the attractive and steal level for multiple of the respective coins. So let me know if you have any specific questions. Obviously, this is something that's expected, right? It's going to be some volatile anticipated pressure ahead of the Fed meeting tomorrow. Obviously, some comparable pressure ahead of the CPI report and the PPI report, right? And this is something that Jerome has gave us some of a heads up, but not like a confirmatory heads up before. It's like the with respect to the 3 interest rate hikes this year, which seems like we are seeing the first one or getting a taste of the first one. But interesting is that it seems like it might be more, right? And I was reading an article earlier today from Jamie Dimon from my subscription to the JP Morgan account, which I get it because I used to work there. It seems like JP Morgan is predicting that it might be 4 Fed rate hikes this year, but he believes that long term wise, this is going to be one of the biggest bull run ever in the history. So it's a big statement, but he seems like he's speaking on behalf of Jerome as well. Jerome said 3, right? He said 4 might make more logical sense, but he is bullish on the outcome of by the end of the tunnel. So interesting. So let me know how it goes on this Monday. Hope you guys have a great week as well, and take care. Bye.